Start. Hi, this is Dr. B. Meena, Head Department of Commerce from Petition College of Arts and Science. In this video, I'm going to teach you how to prepare a balance sheet for a bank. So in this PPT, you know the format, how to prepare a balance sheet. The first column under the balance sheet format is capital and liabilities. The second column is schedule number and third column is amount. Under the capital liabilities, we have five items. First one is capital, second one is reserves and surplus, third one is deposits, fourth one is borrowing, and fifth one is other liabilities and provisions. And after finishing the other liabilities and provisions, you get the total of the liabilities side. And next one is the asset side. Under the assets, we have totally six schedules. That is, sixth schedule is cash in hand and balance with RBI. The seventh one is balance with other banks and money at call and short notice. The eighth one is investments. Ninth one is fixed assets. And 10th one is other assets. Sorry. Eighth one is investments. Ninth one is advances. 10th one is fixed assets. And 11th one is other assets. And the balance sheet format is a vertical format. Once you get a total of the schedule 1 to 5, and this total has to be same as 6 to 11. Under schedule 1 capital, we have authorized capital. So usually the problem may have information about the authorized capital. We need to show the authorized capital in the amount or column, and we should not consider the amount for totaling purpose. We need to look into the problem. Is there any other information about the issued and subscribed capital? We need to post that amount. And then, is there any other information about the call scenarios? Means we need to deduct from the subscribed capital. That tells you what is the total of schedule number 1 as capital. Next, schedule 2 reserve and surplus. We need to show statutory reserve, capital reserve, security premium account, revenue and other reserves, and whatever profit we added in a single account as a category over here, that has to come in the schedule 2 reserves and surplus. So this is all about schedule 2 reserves and surplus. Next, schedule 3 deposits. Under deposits, whatever deposits maintained by that particular bank, that amount will be posted over here. The deposits may be term deposits, savings deposits, or any kind of deposits. So all kind of deposits will come in the schedule number 3 deposits. Once you finish schedule number 3, we'll move on to the schedule number 4 as borrowings. Under this schedule 4, we have only two items. That is, either this bank will borrow from any other interrelated banks or from RBI. So if you are going to prepare a balance sheet for any particular bank, that particular bank can make borrowings from RBI or from any other banks. So those borrowings will occupy over schedule number 4. Next, schedule number 5, other liabilities and provision. Under other liabilities and provisions, bills payable, inter-office adjustments, interest accrued, others whatever provision for income tax and closing rebates, any outstanding liabilities, any payable amount is there means that will come under schedule 5, other liabilities and provisions. Once you finish schedule number 5, other liabilities and provision, we'll move on to the schedule number 6, cash in hand and balance with RBI. Only two items will come under the schedule number 6. The name itself, you have those items, that is either the cash in hand or any other balance maintained by this particular bank with RBI means we need to bring it over here under schedule number 6. Next, we'll go on to the schedule number 7. The schedule number 7 is all about any other balance with other banks and money at call and short notice. So then these two items will come in the schedule number 7. Next, schedule number 8, investments. If a bank made any investment in the form of common securities or in the form of any other approved securities, debentures or bonds or gold, means you need to bring all those kind of investments under shield number 8. Next, we'll move on to the shield number 9, that is loans and advances. I can say only 5 items will come in this shield number 9. That is any kind of loans, any kind of cash credits, overdraft, and bills purchase will only come in this shield number 9. If you have any provision for bad debts, you need to bring it over here and deduct that amount from this loans and advances. Remind you again, in case in problem you have provision for bad debts, means you consider that item, that amount has to be deducted over here, shield number 9, advances. Next, shield number 10, fixed assets. Under fixed assets, you need to show any fixed assets maintained by the bank, like building, machinery, premises, any fixed assets, whatever fixed assets that is possessed by the bank, means you need to bring it over here. Is there any appreciation, means you can add, depreciation means you can deduct. Next, we'll move on to the shield number 11, other assets. Under other assets, we need to show any branch adjustment, that is interest adjustments, interest accrued, tax paid in advance, stationery and stamps, non-banking assets acquired in satisfaction of clients. These items will come and occupy in schedule number 11, other assets. Next, schedule number 12, that will not be a part of the balance sheet, but it show as a footnote under the balance sheet. This amount will not be considered for totaling purpose, but we need to show this item as a footnote under the balance sheet. What are the items must be considered? Schedule number 12, contingent liabilities, claims against the bank but not acknowledged as debt, liability for partly paid investment, outstanding forward exchange contracts, guarantees given on behalf of customers, acceptance, endorsement, and other obligations, any other contingent liabilities. Contingent liability means these liability may or may not arise in the future. That is called it as contingent liabilities. These are the examples that will come under the category of contingent liabilities. Again, I am remind you, this total will not be considered for totaling purpose. It will show as a footnote under the balance sheet. Okay. I want to highlight certain items fixed to banker's balance sheet. That is a rebate on bills discounted. That means discount received in advance. So how we will treat this rebate on bills discounted in our balance sheet? In case if you have opening and closing rebate on bills discounted, means the opening rebate and closing rebate will be considered in schedule number 13 when I explain the profit and loss account for a bank. How this treatment will come in your balance sheet means only the closing rebate on bills discounted will be shown under Schedule 5, other liabilities and provisions as an adjustment. Okay. Then that is inter-branch adjustments, or that is branch adjustment or inter-office adjustments is given, means you need to consider these adjustments in the balance sheet only. That is transactions between the branches arising out of remittance create inter-branch indebtedness. It is shown as the inter-branch adjustment. It is shown on the asset side of the balance sheet if it has debit balance. Mind it, if it is mentioned as debit balance, means it will come under schedule number 11, other assets. If it has a credit balance, means it will bring under other liabilities. So if the branch adjustment or inter-office adjustments as mentioned the bracket debit, means it will bring under schedule number 11, other assets. If it is mentioned in the brackets with the credit, means it will carry to other liabilities, schedule number 5. Okay. Then non-banking assets, it's an assets acquired by a bank in the process of lending, that is selling of the tangible property of the borrowers in case of a default in the payment of loan or interest. These non-banking assets always find a place in schedule number 11, other assets. And statutory reserve, already I made a point when I was explaining the profit and loss account. It is mandatory for all banks in India under RBI guidelines. They need to create 25% as statutory reserve from the current year profit. And bills purchased and discounted always find a place in the schedule number 9 on the asset side of the balance sheet. And bills for collection is another kind of footnote under the balance sheet next to contingent liability. The provision for taxation. Already we showed the provision for taxation under the P&L account. That is as one of the expenditure under the title provision contingency. The same provision for taxation will find a place in the shell number 5. Any tax paid in advance means that will come under the category of other assets, shell number 11. So in this session, you will come to know how a bank can prepare a balance sheet. So if you have any doubts, you can clarify your doubts by posting the comments in my video. Thank you for watching this video.